So I was doing my usual financial research and I stumbled upon this video that was talking about what happened during the Great Depression. Now, what was surprising was how similar the financial situation is now to how it was back then. Lower manufacturing production, lower home construction, slowdown in major industries, workers' layoffs. You may as well be describing the whole post-pandemic economy if you ask me. But what do you guys think? Could we be reaching Great Depression levels yet again? Do you feel like there's something that they're not telling us? Hit me up in the comments down below. Let me know how you guys feel. Now today, we're going to deep dive into a topic that you'll be questioning everything that you thought about money. So picture this. For the longest time, money was all about gold. You wanted more money? Well, you either had to sell something or break out the shovel and go mining for that shiny stuff. But here's the thing, digging up gold costs money. Now, if it takes you more cash to get $1 worth of gold, then you're not going to bother, right? Makes sense. It's not profitable. But then bam, fiat currency entered the scene and it turned everything on its head. Suddenly the money supply could expand like never before without any kind of natural limits. It was like a money party on steroids. But you know, every party has to end. Now I think you know where I'm getting at here because a crazy twist is happening right now. The kind that we have not seen since the Great Depression. Now the Fed is putting out all sorts of restricted money policies, which means that the US money supply is shrinking faster than a melting ice cream cone on a hot summer day. Yes, you heard that right guys. The dollars are disappearing. So why the heck is this happening? What kind of consequences are we really looking at? And what on earth is the Fed going to be doing about it? People are waking up and they're realizing that all problems that we have had over the last 100 years have been due to the Federal Reserve. Not just financial problems, but every single cultural problem is supported by the debt-based system. What do you guys think? So that's what we're going to deep dive into today. So go ahead and grab a seat because it's going to be a bumpy ride as we ride through the world of money contraction. We're also going to unravel the mysteries, expose the secrets, and we're going to rain some knowledge on you guys today. By the way, for the best way to invest in gold or silver, check out the links in the description down below this video. All right, guys, so let's take a look at how money used to work, back in the day. So here's the deal. So the total amount of money in circulation used to increase by 1.5 percentage points on average. Why? Well, because people were digging up gold from the ground and that's where money came from. But here's the thing. It's not exactly accurate to say that the money supply grew at the same rate as the gold supply. You see, throughout history, we've had other forms of money like currencies backed by gold and credit that could be exchanged for gold. These acted as layers on top of the gold money supply. And guess what? They could expand the overall money supply way faster than the gold itself. So when we look at a long-term chart of the money supply, even in like the 1800s, we could see some wild jumps. Sometimes the money supply would expand by a whopping 10 to 20% per year. That is definitely a leap for the country's cash flow. Now, here's the catch. When you have this kind of expansion in the money supply thanks to credit or a currency backed by gold, you can't just keep expanding forever. At some point, there has to be a contraction. Think of it like a little bit of a give and take. Now, after the expansion, the money supply has to shrink again. During the 1800s, for example, we saw the pattern play out. The money supply would expand due to new loans and credit, but then it would contract when the debt was ultimately paid off. It's kind of like a cycle, Expand, contract, rinse, wash, repeat. Yeah. Now just imagine if you had a currency that was backed by gold and you decided to expand the supply of the currency endlessly without ever shrinking it. Well, my friend, you'd end up with a whole lot of trouble. Hyperinflation, to be precise. People would lose all faith in a currency and everybody would basically scramble back to good old reliable gold. Does any of this sound familiar, guys? So to avoid that mess, the money supply had to go back down to its original level. It had to align itself with the gold supply. On average, though, the money supply did manage to grow by around 1.5% over time. Yeah, it had its ups and downs, but that was the average growth rate. So now here comes the twist. The thing is, throughout most of human history, wealth was growing at a faster pace than 1.5%. So what happened? Deflation. As the total wealth increased faster than the money supply, prices actually went down over time. Kind of cool, huh? I wouldn't mind prices going down. So that's basically how things used to roll when it came to money. Crazy expansions followed by contractions and overall growth rate of about 1.5%. And hey, as wealth soared, prices took a dip. Who would have thought? But then something amazing went down during the 1900s that really shook things up. In 1913, when they set up the Federal Reserve, that changed the game. How many of you guys know that the Federal Reserve is not really federal? Anyway, so it allowed credit to pump up the money supply in the United States at a way faster rate. But guess what? This ultimately led to the first Great Depression in 1920. So before 1916, the money supply was expanding crazy, kind of like around 13% a year. And then out of nowhere, it plummeted. boom, Federal Reserve was born in 1913 and started this artificial credit expansion that created more money. People felt all rich and splurged like crazy, just kind of balling out of control in the 1920s. Prices shot up, but you know what happens when a credit boom goes bust, right? It's like any other bubble. Everything falls apart, and that's exactly what happened. The first Great Depression hit. Now, you would think that the Federal Reserve would learn its lesson, right? Nope. Around 1922, they started artificially expanding credit again and playing with the interest rates that were way too low. And this created another boom in the money supply. The late 20s were all about money expansion. And yep, you probably guessed it. The same thing as before. Easy credit made people spend more and more money, piled up more and more debt, and drove prices through the roof. And then, boom, again. The Great Depression of 1929 just hit us like a ton of bricks. You know what? Tell me if you guys agree. I never want to hear the Fed didn't learn their lesson ever again. I don't think that the Fed is inept or making mistakes. They know exactly what they're doing. When money is printed like crazy, prices shoot up. But when the money supply shrinks, people can't afford things anymore, so prices have to come crashing down. It becomes this downward spiral. Wages drop, spending power evaporates, and everything pretty much just goes downhill. It's all definitely sounding familiar. Now, the money supply has been on a steady rise, higher and higher. You see, there's no limit on how much money that they can create. No more anchor like gold holding them back, right? They can just expand the money supply as much as they want, and as long as the politicians are on board, they can just keep on doing it. Jerome Powell just cranking up that printer. Let's go. Now, if you fast forward to 2020, the Federal Reserve, in all of its wisdom, they decided to test its political will. You see, it's been ages since the United States had seen any kind of real inflation, right? So, well, what did they do? They went all out with their money supply expansion. It was like nothing that we had ever seen before. And in 2021, the growth rate of the money supply reached a mind-boggling 27%. Yes, you heard that right, guys. 27%. That's probably more accurate in terms of where our level of inflation is. But anyway, they were creating money like there was no tomorrow. But guess what? After reaching its peak in April 2022, the money supply started shrinking. Right around when Fed Chair Jerome Powell started raising interest rates, if you guys remember. It's been on a downward trend ever since then. In fact, it hasn't been this low since September 2021. Now, let me tell you, this shrinking money supply, it's a big deal. It's something that we haven't seen in American history since the Great Depression. Now, of course, sure, there was a couple of times in the 1990s and, back in 1959 when the growth rate approached zero. But the last time that the growth rate went negative, meaning that the money supply was actually shrinking, was during the thick of the Great Depression. Now, you might be wondering, where does all the money go when the money supply shrinks? Well, to be straight with you, it's actually being destroyed, like poof, gone, out of existence. So how does this work? When new money is created, it's done through one thing and one thing only: new loans. Yeah, so when a bank makes a loan, that money is conjured out of thin air. It's the same with the Federal Reserve. When they create new money, they do it by loaning it to someone, often the good old United States government. Here's the thing though. When a loan gets paid off, that money disappears. It just vanishes into thin air. Now you might be thinking, but wait, weren't loans being repaid during all these years? Well, yes, some debts were definitely getting paid off. But here's the kicker. If I pay off $1 million in debt, but somebody else takes out $1.1 million in new debt, well, the net increase is $100,000. So, over the past few decades, since the Great Depression, the net growth of the money supply has been positive because of new debt issuance. But now, with the money supply shrinking, it means debt is getting paid off. And you might be wondering, well, whose debt is actually getting paid off? Well, sure as heck ain't household debt, that's for sure. So that just keeps on going up. And it's not the government's debt either. The national debt just keeps climbing. So the answer is, drumroll please, it is the debt held by the Federal Reserve. Now, if we take a peek at the Fed's balance sheet, you can see that it's been declining ever since April of 2022. And guess what? That marks the top in the money supply. It's no coincidence. So basically, the Federal Reserve is letting the debt it owes get paid back without rolling it over. And since the Federal Reserve primarily holds national debt, which means that the US government owes them money, the government has to find other lenders as its debt grows. The Fed saying, hey, pay me back for all that old debt. I won't be lending you any more money. So the government has to go look for money elsewhere, and that's what's driving up its borrowing costs. And so that's where we hit the main consequences of the shrinking money supply. It's a whole new ballgame, guys. I mean, we're feeling it. Massive waves of layoffs, out of control inflation, unpayable credit card bills. It's all coming to a head here. Now, I don't know who said it before, but there's this one quote, and it goes like, I believe that banking institutions are more dangerous to our liberties than standing armies. I definitely feel like people are getting getting wiped out and driven off the financial cliff. But what do you guys think? Let me know if you guys want to learn more about this economic crisis that we're in and the Fed's role in the pain that you guys are feeling at the grocery store or at the gas station. And we could also talk about some lucrative side hustle opportunities to generate some additional income streams. This could definitely help shield our financial freedom from the worst of its financial catastrophe. Just hit me up in the comment section down below. Let me know what you guys want me to talk about next. So yeah, guys, it is a crazy financial world out here, so let's always remember to keep each other safe. Another Great Depression could possibly be on the horizon, and the Federal Reserve just making matters worse. The government scrambling for lenders, and things ain't as cheap as they used to be. Make sure your friends and your loved ones are safe and prepared. Go ahead and hit the share button right there, guys. I totally appreciate that. And hey, thank you for always hitting the like button, for always subscribing. Appreciate it, and I will see you guys on the next one. Be safe.